Hello guys, this will be my fifth stock analysis, and today we're going to be looking at a stock that popped up on my screener, STRT, trading for $24 a share, and it hit a peak of $67 and is now down to 24. It has a market cap of 100 million. All right, guys, let's get right into it. Kind of already have the 10Q ready. Of course, these are quick analysis, so we're just looking at the balance sheet. If you guys want deeper detail into these companies, comment below. All right, so let's do the usually do. I have my Excel, put it over here. I'm just gonna copy down what they have. So let's go. The receivables. Let's see. Oh my god. This company, I mean, it looks. Let's do the valuation and then see. But they just released earnings, and it does look pretty good. Their margins expanded, and their sales went up because they raised prices on their bigger customers. So they are raising prices. They were having trouble with, and let me just write this down. Sorry guys, I'm trying to multitask. They were having trouble with people paying or with workers asking for more money in Mexico. I think the minimum wage got raised, I think like 20% or something like that. But it seems like they're doing fine putting the cost back on to the customers, which is working. So the company is profitable. It was unprofitable for a minute, but now it has come back. So we're getting a profitable company here. This is probably, I think, the first profitable company that I am doing an analysis on. 78 million, which, I mean, I think in all the times that I've invested, I've probably only been in, I don't think I've only been in probably one company that was profitable. Rather than that, I usually buy companies that are in distress and then they come back to profitability, or they just say they will, and the earnings price it in. All right, guys, so they got 97 million, or is that right? Yeah, 97 million receivables. So let's go see what those receivables are. Let's see. Let's just put receivable. Maybe we'll come up then. Primary sellers from our major customers include. Okay, so you see, we like this. They're dealing with bigger companies, so most of these from our major customers. Okay, this is great right here. So let's write this down. GM accounts for 28 million. Let's just put 20. Ford accounts for 18 million, and Stellantis accounts for 13. So let's do that. So 61 million of those accounts receivables are big dealers that, I mean, most of these are from big auto companies that will most likely not go bankrupt. So that's really good right there. Let me go on their 10K, because sometimes they list more stuff on the 10K. Let's see. I don't. Okay, 2023. Let's see here. All right, let's go here. Oh, I accidentally clicked doc. Oh my god. Okay. Let's see. Okay, they kind of have the same thing here. So yeah, that's what you like to see. I just, because I've done analysis on the stock before, and I'm pretty sure they show their accounts receivables, like a whole list of where it's from, and I think one of them most of them are from company. I think there was only one company in there that could have bankruptcy risk, and that would be actually Aston Martin. But rather than that, I don't. I mean, I'm pretty sure it was. Let's see. Come on. Yeah, most of these receivables are good. So this is the thing about these receivables is that I don't think I would put a discount on them that heavily because they are from major automakers that really have no risk of bankruptcy. But I remember one was Aston Martin, but I'm pretty sure it was not enough to really make a huge difference. Um, I remember seeing they showed it. Let's see. Yeah, okay, here we go. So these are just receivables. So yeah, this is normal. I just all right. We're gonna stop because I can't let these videos run on super long. Let's go back up to the balance sheet. Go to the balance sheet. All right. So for that one, I'm just gonna do. Let's just say I'm just gonna put a 10% because I'm pretty sure these receivables are not from companies that really have any like really any risk of bankruptcy. So they're probably gonna get. When I say probably, we are highly certain that they will get this money back. And for these inventories, um, do just keep going down the list, guys. I just got it on my screen here, and I'm just kind of all right. Customer tooling in progress. Let's see. We're back here. Alrighty, so inventories obviously finished products, purchase materials, and most of these are purchase materials. So I wonder what those purchase materials are, because if it's like iron, copper, and stuff like that, that might actually be pretty good for the. Um, let's see. Let's see. Hmm. Oh, they have a buyback program. Oh, that's interesting. Oh, they didn't purchase any shares. Yeah, because that's when I think their business started to decline. Because obviously, when interest rates go up, people buy less cars, and car prices start to drop. But this is pretty. Or automakers stop, making a lot of cars like they were, like what was happening back in, uh, 2021, 2022. All I had to do is if you had over 170, 700 credit score, and you were breathing, they would walk you out the door with some freaking car at a 2% interest rate. So things have really changed now. Now when you walk in, you're probably going to be able to get maybe 8 to 12% interest rates on vehicles. So, and we're starting to see that in the rental car market. Rental car prices are dropping, but new car prices are staying the same, I'm pretty sure. But okay, let's just leave it like that. We're just going to do the regular rate that we usually do. Customer tooling in progress. I don't know what that is. Let's see what they say about it. Customer tooling in progress. We began to decrease significantly in the fourth quarter and continue to decrease the first half of fiscal 25 as we normalize to near historic levels by the end of the calendar year 2024 with the completed launch of the associated programs. We expect the Mexican VAT. Okay. So they're saying that this customer tooling will begin to decrease. Okay, let's just leave that the same. Value added. Okay, leave that. Other current assets, just leave that. Okay, so now let's go here. Total current assets. Let's just do the regular. This would be 240. Okay, now let's do our new rate. We go that. All right, 200. So we knocked off about 30 million in. This is what I did. So I just did the. As you can see, most of these accounts receivables. This is what you want to see. Accounts receivables mostly by companies that have no risk of bankruptcy. That work with larger customers. That's great. Now let's go down here. Property, plant, equipment. Looks like they've depreciated them by a lot, deferring. So let's just go long-term assets. Got deferred income taxes for the long-term assets and PP and E. Alrighty. So deferred income taxes of 13 and 5,096,000 and property plant equipment, but most of it is depreciated, so let's just put the final value in there. So let's go here, let's add them all up. So total assets. So here we go, guys. Let's add this up, sum that, and let's go here, and then this is total assets, and we got sum that, oh sorry, that plus that, 323 million. Now let's get the total liabilities. So let's put this back over here, and we have total liabilities of 120 million. Okay, so let's put that down. So let's see total current liabilities, 120,772, and then we have 1.3 million, 26,113,75200. Okay, so let's add all those up. Okay, 128 million, and this is going to be the fair value. Let's go here, equals sum. It's going to be that. Oh, sorry guys, put this over here. Okay, so alrighty. And then let me make sure to do this. So the fair value is $194 million a share. And let's go find the shares outstanding. It's usually on the top. Common stock of 4 million shares outstanding. So now we want to go down. Let me make sure that's right. Because my last video I've seen, I'm doing this live, guys. So just remember that. So I might make mistakes. But just bear with me. If you see any mistakes, post it in the comments, and I will remake the video. But I'm sure I won't, because I always try to double check, because I don't like, giving people wrong information. That's just dumb. Alrighty. So that pops us out with a fair value of $47 a share. Let's go here. Even if we said that inventory is like, yeah, this company, man, damn, $43 a share. Let's look at what the share price right now. I think it's like $24. Let me see. Oh, $25. So this is 24.79. So let's do the upside. And in my last video, I seen when I did the upside thing, I did it totally opposite. So let's see. I'm gonna do it right this time, guys. Trust. And guys, if you're still watching, please like and subscribe. I get really not that many views on these videos because I would say they're kind of, if you're not really interested in stocks, I would say they are kind of boring. So all right, guys. So that means there's 77% upside right here. That would be. I think this thing was just like $20. And actually, but now that I, here, I want to say that I do have a position in this company. I did buy it $20 a share. But yeah, I think this company, if you read the filings, read the quarters, guys, I do own some shares in it, so I can, full disclosure. But this is why I bought it, because I'm like, I like how the accounts receivables are all big brands. I know they're not going to go bankrupt. The company is obviously, taking the cost inflation and putting it back on their customers. That's great. I mean, this company looks great to me. They're dealing with large automakers. There's not much risk of those companies. It's just everything about it is great, and that's why I own it. I think that we will probably see about $35 to $40 a share. Um, yeah, I see the business improving. I have not read the new earnings call. Um, I probably should have, but I do like the stock a lot. So, guys, if you made it this far, please like and subscribe. I'll keep posting these videos. Um, and yeah, I mean, tomorrow I have many stocks written down that I want to go through. And another thing I want to say is that if you guys want to see, quality over quantity, like if I already know a stock's not a buy, you guys want to see those videos and you can see the process that I go through in order to find out what it's worth, or do you guys just want to see videos on companies that actually have huge upside? Um, well, that'll be the end of the video. Thank you guys. If you made it this far, please like and subscribe. And yeah, have a great rest of your day.